Today, we saw the S&P 500 making new all-time highs along with the NASDAQ, and we saw the fear and greed index actually getting closer to neutral territory. So as the market was making new all-time highs, why oh why was there less greed out here in the stock market? Now we come over and look at how the indices fared across the board. The Dow was up 308 points. The NASDAQ was up 254 points. S&P 500 up 36 points. Russell 2000 up 0.88. Now we look at advancing issues versus declining. We had 56.9% of issues advancing on the day. Then when we come over and look at sectors across the board, notice a majority of sectors were in the red for the day. We only had 4 of the sectors in the green. The rest of them were in the red. And the laggard out there was energy. Energy was down 2.01. Now, when we look at why energy was actually down, we need to come over to the economic calendar. Now today, we know crude oil had inventory numbers come out, and we came in at negative 5.1. So we had a draw of 5.1 million. And as we look at a chart of crude oil, we would think that with a draw, we would see crude oil actually rocketing up. And that's exactly the opposite of what actually occurred. You look out here on the 30-minute chart, and we can essentially see once the crude oil numbers were released, boom, crude oil came dropping off a cliff. Now, there's quite a few of warning signs out here in the stock market today. For instance, when we look at the S&P 500, we turn on the 9-count indicator. Notice today we completed a 9-count. What this signifies is exhaustion in the market, and that could either be a consolidation up here at these levels, or maybe we start to get a pullback and we could potentially look to fill the gap from today. However, that was not the only warning sign that we had out here in the stock market. While the stock market was making new all-time highs, on a daily chart, look at the VIX. The VIX was actually able to close in the green. When we put this on an intraday chart, you can see the VIX basically double bottoming down here and then starting to rally up and closing in the upper third of today's range. So again, that's something to pay attention to. Now, was this nothing more than hedging in the market? Because tomorrow we do have a little bit of economic news. We have the weekly unemployment claims. However, if I think it's major hedging taking place, it probably has to do with the Friday's jobs number. And on Friday, are we going to actually learn that the labor market is stronger than what we anticipate? Or are we going to find out that all along they've been doing nothing more than blowing smoke? We come back over today and notice at 8:15, we had the ADP non-farm employment change. We came in at 146,000 versus 152,000, previously 184. So for me, I see this as the economy is starting to slow down here just a bit. And when we look right over here, we can actually see where the losses came in. We lost 26,000 manufacturing jobs. So again, we are seeing a weakening of the labor market, regardless what they keep telling us. They keep telling us the labor market is strong. It's strong. It's strong. It's strong. Well, it is until it's not. And I think we've seen plenty of cracks already along the way. Now, today, Jay Powell was speaking at 145, and essentially inflation threatens Fed rate cut expectations once again. And here's what we really need to pay attention to. As we go down to the bottom paragraph, we can see right now there is a consensus for a December rate cut. But if we do see inflation rise in the November CPI report, the Fed may hold off rate cuts because of potential tariffs. So keep that in the back of your mind. Now, as we come over and look at the Fed watch tool, notice we have the next FOMC meeting coming out in 13 days, and they are projecting a 77% chance the Fed will be cutting interest rates. So when does that next CPI report come out? It's going to be 1 week from today. December 11th, we have the CPI report coming out right here at 8:30 a.m. Now, as we come back over and look at the SPY, notice on the daily chart, the MACD does have a bullish cross. However, today we did leave behind a gap, and we look at this on the 1-hour chart. Notice now we have, triple divergence. Every single peak is actually the MACD indicator making a lower high. This is a warning sign. The trend may not be as strong as what they want us to believe. On the 30-minute chart, what do we see? Well, essentially today, gap up. We came back, tried to test gap support, didn't quite make it down there, and then we just rocketed on up throughout the day, making new all-time highs. Now, as I look at the profile, this area has my attention. I think it's highly probable we come back and visit this area tomorrow. That's going to be anywhere from 607 and a quarter down here to about 606.58. Now, the way I want to play this area will be, as long as we're below value area high, I want to look to target this zone. If we can break below it, I'm going to look to target gap support and then potentially the gap coming all the way down here and potentially getting filled. As a reminder, Apex Trader Funding, you get 50% off all evaluation accounts, passing as little as 1 day, and $125 activation fee across all account sizes. If you'd like to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, when we come over and look at the futures markets real quick, we look at the 4-hour chart. There's nothing but clear blue skies up ahead. But we can see the minus development area right over here, which I think is very juicy at this moment. Now, keep in mind, we've had back-to-back weeks where we have closed outside of value and we have failed to come back and test value area high. Now, this week, we missed it by a measly 4 ticks, and then it's essentially been off to the races. And the way it's looking right now, could we potentially have 3 back-to-back weeks where we close outside of value? I think that's a little bit far-fetched, but we're gonna have to wait and see. This minus development in this area does have my attention. Maybe tomorrow or Friday, we come back towards it. 6,076 down to about 6,068. As we come over and we start looking at the daily profiles, however, notice the last 30-minute candle, we have it basically a 1-2 reversal, and we have a couple minus development areas I do want to focus on, along with the fact that we did close outside of value area high, which is similar to what we did yesterday. What do we do? Boom, last night during Asia, we came back and tested it. So tonight, I'm going to be heavily focused on a retest of 6,089 and a quarter and see, can the market make it down towards that price point? We also have the point of control at 6,086.75. Value area low is way down here at 6,071.75. Now, we don't have a lot of minus development areas within this area of the profile. The minus development area is really up here towards the upper end. But if we can start getting below value area high and we can stay below it, then I do want to stay on the sell side of the market. Keep in mind, when we get in a market melt up situation, the market can continue to go a lot higher than what we potentially think. As we come over and look at the QQQs, notice we have that ABC structure right above us at 526.09. We are almost there. We're not that far away. We have that gap that was left behind from the day. MACD indicator is showing divergence up here at this area. We look over here on the 30-minute chart. Notice as we were making new all-time highs later in the day, we again have MACD divergence. And when we look at this, we have a large gaping gap. So tomorrow, if we're below value area high, I want to look for possible retest of gap support and then potentially coming all the way down here and fill in the gap. Now, when we come over and look at the futures markets, look at the NASDAQ. We are miles above value area high at this moment on the developing value area high. We'll see if this shifts up a little bit higher or if price starts to come down. Now, if we just simply look at these candle counts, this ends up being an up candle. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive up candles in a row. And that is going to lead to, at some point in the near future, we are likely going to start to get a pullback in this market. We come over and look at the daily profiles. Notice we're closing above value area high, which comes in at 21,492. The point of control will be 21,483 and a half. And value area low will be down here at 21,396.00. So we'll see, can we start to get the rotation down towards this price level or not? And again, I will be focused on value area high and the point of control tonight. See, can we go ahead and get that level tested and out of the way? Now, if we come over and look at the dollar index real quick, notice the dollar index has the head and shoulders pattern, left shoulder, head, right shoulder, and that head basically spiked right into an ABC pattern completion. Now, I like the fact that the right shoulder is lower than the left shoulder. So this could set up the dollar starting to fall even more. Now, a weaker dollar normally is going to favor the bulls in the market. And then we look at Bitcoin. Bitcoin is also on the move once again. So we're starting to see more risk on once again. We look at Bitcoin on the 30-minute chart, an absolute rocket ship, hit 99,252. So will we be able to see Bitcoin over 100,000 by the end of this week? Let me know your thoughts in the comment section down below. Now we jump over and take a look at gold. Gold basically still stuck in this consolidation. We see the volume being built out on the profile. We're just waiting for one of these 3 swing points to be busted. The lower swing point down here, the one slightly higher, or the one right above. And that'll tell us which ABC structure we're actually in. Now, if we jump over and take a look at the Dow Jones today again made another new all-time high. But let's not forget, we still have an ABC completion up here at 458.13. Then we look at the small caps real quick. Small caps today is still kind of stuck in this area, kind of hoping the gap down here would be filled. The gap still has not been filled, and at some point that gap will be filled. Will it be the news tomorrow? Will it be the news on Friday, or is it going to be a hold off until next week? Now, if you want to learn about TPO, aka market profile charts on the TradingView platform, make sure to watch this video right here.